Everybody, welcome to the Lund Loop Daily Update for June 2nd, Tuesday, June 2nd, 2026. Interesting day today. So, Google, all in $80 billion for the AI infrastructure build out. Berkshire Hathaway is coming in for $10 billion. That should be a great sign, except they do an offering at the market. Market doesn't like that. So, a lot of the big cap tech names get hit right out of the gate. Software gets hit, although software's had a pretty big run the last week and a half, so that's not anything totally unusual. In addition, crypto has now gone from a winter to an ice age. We'll cover all of that in a minute. But today I took a trade in iron. It's a cash flow trade. That's a specific type of trade. And one of my Lund Loop subscribers in the trade room said, "Hey, can you tell me more about that iron trade? Why were you in it? What caught your eye?" And I said, "Sure, I'll do it in the daily update." So let's talk about iron. First of all, though, let's remember the context for any trade that we're going to go into. Trades are based on strategies, and there's only 5 strategies: scalp, day trade, swing trade, active investment, or long-term investment. So when you're looking to enter a trade, the first thing you have to do is go through those 5 and say, what is my strategy going to be in this trade? And the reason you want to pick the strategy is strategy dictates management. All right, so let's start with what iron is. Iron is a hot name. It's in the data center energy, AI, something space. I don't know. They've got an Australian CEO. They've got deals with this company, that. None of that matters. None of that matters in the context of this trade. Why? This is a trade designed to make money on movement. That's it. In, cash flow, out. Now, that doesn't mean you can't have a very, strong, long-term opinion about iron. You could totally have that, but that can't seep over into the way you manage this strategy. You can also have a full position in iron, something that you think you're going to hold for 2 years, 5 years, 10 years because you think it's the greatest company on earth. Again, that is a separate strategy from the one that we're talking about right now. And I'm going to try to talk through this strategy in the most ideal scenario. Nobody trades ideally every time, for sure. Nobody really trades ideally anytime. We always make mistakes as part of our trades, but we always want to talk towards an ideal and try to get as close to that as we can. So let's start with why even iron. Well, it's been on our watch list on and off a lot of times over the past year or so because it's been a very active stock. It's been a nice moneymaker. And so one of the things I look at when I'm going through the list is I see, okay, iron reversed here off of a 50, had a nice rip. It closed back above a support resistance level right here, had a very orderly 2-day pullback, had a mini flush here, but then reversed. So we've got a breakout, pullback, reversal as buyers show up here. We bounce right off of the 8 EMA. And in my book, this is a high probability that we're going to see some sort of follow through, some sort of momentum follow through. So when I'm looking at a potential trade, there's 3 things that I want to make sure I'm looking at. First of all, are the probabilities in our favor? Now, again, based upon this stock pattern, doesn't mean for sure it's going to work out, but this is something that I've seen work out numerous times, especially in a stock like this. It's been very hot in a market like this. So, okay, first thing is, can we put the probabilities in our favor? Second thing is, how do we manage our risk, which is also part of putting probabilities in our favor, because the better risk management we have, the better the chances are that it's going to work out to our benefit. So that will be the next thing we're going to talk about. And then the final thing is making sure that you always have options. We never want the market to make decisions for us. So going back to iron, there's the setup on the daily, and we got to find a spot to get involved. So what I did is I actually started buying iron in the pre-market. Let's go over here. And so I'm looking for a spot that makes sense to buy pre-market. And if I zoom out a little bit, I can say, okay, here's the pre-market so far. This is when I first kind of started looking at it. Here's the after hours yesterday. Here's the end of yesterday's regular session. And what do I see? I see a very nice intraday base. Now, I can't really base a day trade off of this range, meaning like putting a stop below here means I'm risking $6. And you always want to try to get a 2-to-1, 3-to-1, 4-to-1, the best risk to reward ratio. And if I'm risking $6 on a day trade, the chances I'm going to get a 2-to-1, which would be 12 points, is almost zero. So I've got to find a spot intraday that makes sense. And so I'm looking at this spot right here. And, I started buying very slowly and strategically here, got my average cost right about this level. And so I was risking about $1. Like if we'd started to break into this area after the open and really see some volume coming in, I would have probably had to hit the eject button. But again, I would have only been risking about $1, maybe $1.10, maybe $1.25 at the outside. In that case, all I've got to do is get $2 for a 2-to-1, $3, 3-to-1. You can do the math, $4, 4-to-1, whatever. So building a position here slowly pre-market. Fortunately, we get this pop at the open. Now, the subscriber asked, like, well, how did you know that IRON was going to break higher? Like, I didn't. We're just setting up a framework so that if it does, we know how to manage it. And if it doesn't, we know where to get out. Fortunately, it did pop. And I had a choice, a decision to make right here. Do I do nothing and just hang on to the full position? Do I sell the full position? Do I sell a partial? What do I want to do here? And there's a lot of things that went into this decision. But for me, whenever I'm getting into a position like this, the first time I get the price moving in my direction, especially on a short-term trade like this, I want to take some chips off the table. I want to lock some profit in and I want to reduce my risk. So I sold part of my position up $2. Okay. That also gives me that optionality that we talked about, meaning I can sit and see what happens for the next hour, hour and a half as the market fluctuates. And I can see, is there going to be a base that we can maybe go higher from? And so you see IRON actually goes up another $2, it was up $4 from my average price. And then it started to do this nice consolidation like this. And this is what I mean is, since I already took some profits out, what I'm looking at is, okay, I can hang in here for a while, no big deal. And what I want to see is it going to set up an intraday base? Is it going to break higher? Is it going to close the day strong near the highs of the day? Because if it does that, that would be the time that I would transition possibly from a day trade to a swing trade. So you see, I go into the trade with the framework strategy of a day trade. That's all I care about. But if price supports it, I might be able to transition it to a swing trade. So as I look at the price forming here, I'm like, okay, great. If we break up here and we close, towards the high of the day, I'm totally fine taking overnight risk because I've already locked some profit in. We've closed at the highs of the day. I've reduced my position by half. So even if we got an overnight gap down, the chances that I would lose money are pretty low. Unfortunately, IRON failed and I sold the rest of my position here. So I made some good money, some cash flow money. It's not what I would have wanted. I would love to have extended and been a swing trade that I held on to for a week or two. But the point I'm trying to make is every step of the way, I'm trying to frame this. What's the context here? Where am I going to be wrong? What area makes sense for me to get in? What's the probabilities of what I'm risking getting a return of 2, 3, 4? Again, this is super important. How did I know that IRON was going to break higher? Didn't. I had no idea. I have no insights as to whether IRON was going to break higher today or not. All I did was tailor my strategy based upon a framework, a chart-based framework that told me, here's where you'll be wrong, here's what you're risking, and here's a reasonable spot that you could get to. And then once we started to move in that direction, I gave myself optionality by, taking some off. Someone else might have done it totally different. They might have said, no, I'm going to hold on to the whole thing. Maybe they would have sold it all up 4 and made more money than I did. Who knows? The point is, nobody is wrong because everybody has their own risk parameters. They have their own goals. The only thing that's wrong is if you're not doing it in some sort of framework. Yesterday, I talked about this trade in ASTS. And one of the things I said, so and this is really important. I talked about this on Spaces, but I'm going to take some extra time and talk about it here. So ASTS dropped on Friday in sympathy to the, oh, I guess I should go over to the chart. ASTS dropped on Friday in sympathy to the Blue Origin explosion. Really, that should have nothing to do with ASTS, but it did. A lot of people were saying, "Oh, this has nothing to do with ASTS. This is an overreaction. This is a buy." I don't disagree with that, but it's just not a blind buy. You don't just go, "Oh yeah, I'm going to buy." What you do is you wait for a spot where again you can frame the trade. Maybe you're framing this one as a potential swing trade. And so what I talked about yesterday was how we had this sell off here, hit the lows, bounced up, hit the lows literally to the penny, came up here. At this point, this was the previous day's low was down here, right? So recaptured the previous day's low, pulled back and had this little bounce. That's where I bought it, right? That's where I bought it because again, I felt like, yeah, this is an overreaction on the Blue Origin thing, but I'm not just going to buy it willy-nilly. I need to buy it with a framework where I know what my risk is. I know if I'm wrong. Today, fortunately, ASTS had a nice pop. Let's get rid of this, right? And it was up 11 points. I sold half that position up in this area. Now I've got that optionality. Now I've got a locked in profit. I've reduced my size. And now I can say, okay, is this going to maybe extend back up into this area, right? Will price support that transition from a day trade to a swing trade? So again, let's say it for the 100th time, framing, context, knowing the structure that you're going into a strategy with. Why? Because the structure tells you how you'll manage it, where your targets are, what your risk parameters are. All right. By the way, this is all we do every single day. We just look for, it's cookie cutter, lather, rinse, repeat. We look for opportunities where we think the percentages are in our favor, where we can define our risk, where we have a reasonable target, and then manage a trade in a way that makes sense. Does it make sense just to take some cash off the table, or is price supporting us to go into a longer term trade, something that might transition to a swing trade, maybe even an active investment? And you can be here with us if you become a Lund Loop subscriber. So, all right, let's go over to, let's go to